Hello everyone! So welcome again to our channel. So in this video, our topic is still business combination. But we will be dealing with the second type, which is the stock acquisition. Diba? If you still remember, there are two types of business combination. That is the net asset acquisition and the stock acquisition. So in the previous video, we have discussed already the net asset acquisition. So if you haven't watched it yet, so I strongly suggest to watch it before proceeding to this video. So let us reiterate the definition of business combination. So according to IFRS 3, business combination is a transaction or event in which an acquirer obtains control of one or more businesses. So the key word here is that the acquirer should obtain control over one or more businesses. So in the net asset, diba, if you still remember, we obtain control by acquiring the assets and the liabilities of the acquiree. So all those assets will be transferred to the acquirer. So automatic, syempre, controlled na ni acquirer si acquiree. And the second type of acquisition, so it is controlling interest, typically more than 50% of another company's voting common stock is acquired. So control is acquired by having an interest of at least 50% of another company's voting common stock. So take note it must be common stock or ordinary share because preference shares has no voting rights. Okay, there are two essential elements of a business combination. There must be control and it must be, the acquired company must be a business. So an investor controls an investee when the investor is exposed or has the rights to variable returns from its involvement with the investee and has the ability to affect those returns through its power over the investee. So may power siya over the investee. Control is presumed to exist when the ownership interest acquired in the voting rights of the acquiree is more than 50% or 51% or more. So or even below 50%, but the following facts are available. So ang presumption dyan is if you have more than 51% na interest, so it is presumed na you have control over that acquiree or investee. But there are some cases na even though less than 50% yung interest niya, but control is evident through the following situation. So first, the acquirer has the power to appoint or remove the majority of the board of directors of the acquiree. Second, the acquirer has the power to cast the majority of votes at board meetings or equivalent bodies within the acquiree. Or, the acquirer has the power over more than half of the voting rights of the acquiree because of an agreement with other investors. So yung example nito is, for example, acquirer has only 40% interest, tapos may agreement sila ni other investor which has 15% interest. So ang agreement nila is whatever the decisions that the acquirer will make, the other investor will follow. So since the combined interest of the two is more than 50%, that is 55%, so considered pa rin as business combination because the acquirer has control over the acquiree. Last is, the acquirer has power to control the financial and operating policies of the acquiree of a law or an agreement. So these are the examples of situations wherein even below 50% yung interest ni acquirer, so control is still present because of these situations. The second element of a business combination is business. So the acquired investee or company must be a business. So business is defined as an integrated set of activities and assets that is capable of being conducted and managed for the purpose of providing a return in the form of dividends, lower cost, or other economic benefits directly to investors or other owners, members, or participants. So it must be consist of three elements, namely the input, so the resources, the people, then the process, and the output. So if the acquired uh, entity is not a business, so for example, parang warehouse lang or a group of assets lang, so it is not considered as business combination. So in accordance with IFRS 3, so regardless of the type, whether net asset or stock acquisition, ang acquisition method pa rin yung ifa-follow in accounting for stock acquisition. So that is yung 5 steps natin. So identifying the acquirer, or for this case, the acquirer will become now the parent. In a stock acquisition, the acquirer becomes the parent and the acquiree becomes the subsidiary. The second is determine the acquisition date, the date when the parent obtained controls over the subsidiary. Then third, the considerations paid, the price paid by the parent to obtain control over the subsidiary. Fourth, recognized and measure the identifiable assets acquired, the liabilities assumed, and any non-controlling interest or NCI in the acquiree. And last, recognize and measure goodwill or gain from the bargain purchase. So, you will still apply these steps in accounting for stock acquisition. So, let's proceed to an example to better understand. Then actually, we prepared two tables here to compare the two type of business combination, the net asset and the stock acquisition. So you have there your materials. So please download the PDF file which is provided below. So here we have the balance sheet of BB Company as of December 31, 2007. So it has its book values and fair values, then the liabilities and the shareholders equity. So using the two cases, so in case number 1, so AA Corp paid 500,000 for the net assets of BB Company, while for case number 2, same ang amount ng payment, but what is acquired is all of the outstanding shares. So yung case 1 natin will be net asset acquisition, and the second and the case 2 natin is stock acquisition. So take note ha, kahit na stocks yung binayad natin dito, so instead cash yung binayad natin is nag-issue tayo ng stock, so it doesn't mean na stock acquisition. So what you should look is the what is acquired, assets ba or the shares. Do you follow? Okay, if you still remember, I provided a formula in computing the goodwill in the case of net asset acquisition. So, di ba, considerations paid less fair value of net assets. If in case mas malaki yung considerations paid, yung binayad, over the fair value of the net assets, the resulting amount will be goodwill, right? So, the amount paid is 500,000 and the fair value of the net asset of the acquiree is, so ito yung fair value natin, 625, less natin yung liability which is 150. So, ang fair value of net asset is 400 475. So, fair value ng asset minus fair value ng liability. 475. Diba? So, the excess is considered as goodwill. Otherwise, it will be counted as gain on bargain purchase. So, for the stock acquisition, so almost the same pa rin ang formula, but let's update. Considerations paid, so same pa rin yung binayad, plus non-controlling interest. So what is non-controlling interest? Simply the minority interest or the interest that was not acquired or is not attributable to the controlling interest. So for example, if ang inacquire ni parent is only 80%, so yung hindi na-acquire na interest na 20%, yun yung NCI or non-controlling interest. So the non-controlling interest should be measured. So i-add natin sa considerations paid plus fair value of previously held interest. So ano tong previously held interest? So this is in the case for step acquisition. So ano yung step acquisition or business combination achieved in stages? So example nito is si acquirer, yung interest niya is 20% yung una, then nagdagdag siya ng 40%, so naging 60%. So yun yung example ng step acquisition or business combination achieved in stages. So from 20, dinagdagan ng 40, so naging 60%. So ang ibig sabihin nito, yung previously held interest na 20% natin, it should be remeasured at fair value. So add mo yung tatlo, then less natin yung fair value of net asset. So yan yung goodwill or gain. So ito na yung updated formula, or ito dapat yung formula in case the problem is stock acquisition. So magkano yung binayad? So 500 pa rin. So for this case, what has been acquired is all. So meaning 100% of the shares of BB has been acquired by A. So meaning wala lang natirang non-controlling interests. A corporation is the sole or is the only shareholder of B. So binili niya yung lahat ng outstanding shares. So di ba alam niyo naman tong outstanding shares? So outstanding shares are those shares held by the shareholders. So for example, dati si B, ang shareholder niya is si ABCD. So lahat ng shares na hawak ni ABCD, inacquire ni AA Corporation. So for this case, AA Corporation is the only shareholder of BB Company. Hence, he controls the BB Company, right? So pag 100% yung inacquire, syempre walang non-controlling interest. Then sa example naman is diretso yung pagbili, so 100% agad, so walang previously held interest. Again, applicable lang to pag tigi-tigi yung pag-acquire niya sa acquiree. So ang total lang tatlo is 500. Then less natin yung fair value of net assets, same pa rin, 475 equals 25. So if you notice, the same na yung amount whether net asset or stock acquisition. So because this is a 100% stock acquisition. Let's proceed to the journal entry in the books of the acquirer AA Corporation. So in the net asset acquisition, so I hope you still remember what is the entry in the books of the acquirer. So simply debit the assets acquired at fair value. So debit current assets at fair value 225, plant assets at fair value 400, credit liability at fair value 150, credit the payment 500, then debit the goodwill as a result of business combination 25. Di ba? So balance yung debit and credit. Then if in case may expenses, so debit acquisition expenses, credit cash if merong expenses. If shares yung binayad tapos may expenses na related to those shares issuance, so debit to additional paid in capital or share premium. So yun yung entry natin sa books ni AA Corp. However, it is very different in accounting for stock acquisition because pag stock acquisition, ang entry sa books ni AA Corporation or what we call now the parent will be debit investment in subsidiary account, subsidiary, credit, cash, 500,000. So, you notice the difference? Sa net asset, recognized agad yung asset and liabilities ni acquiree, including the goodwill automatic recognized sa books ni acquirer. However, pag stock acquisition, only the investment account will be recognized. So, this account, investment subsidiary, normally, this is presented at the non-current asset section of the balance sheet, right? So, non-current asset account ito. And then, if in case may expenses, so same yung entry pa rin, acquisition expenses, credit, cash, in particular amount. So, nag-differ lang sila dito sa entry with regards to the assets and liabilities, including the goodwill. So the amount on the amount here should be equal to the amount paid or the amount of consideration. So take note, kahit na may goodwill tayo dito na 25, it will not be recognized in the books of the acquirer or parent. Or even if gain to, so it will not, again, it will not be recognized in the books of the parent. So saan ito ma-recognize itong 25? So the answer would be, it will be recognized in the consolidated financial statements. So ano ba yung consolidated financial statements? So bali, pag net asset acquisition kasi class, di ba? Si acquirer may FS, si acquiree may FS. So since na-acquire na ni acquirer, si acquiree, so the FS of acquirer will be closed, right? And its assets and liabilities will be added to the books of the acquirer. So automatic, parang may automatic consolidated na dito sa net asset acquisition because again, the assets and liabilities and goodwill are included in the financial statements of acquirer after this entry, right? However, in the stock acquisition, so kung may FSC acquirer slash parent, may FS din si acquiree slash subsidiary. So take note, pag stock acquisition, hindi nasa stop yung operation ni subsidiary. So compared to the net asset na normally nawawala si acquiree. Pero si subsidiary, continue pa rin yung operations niya. So sa books ni acquirer or parent, ito lang yung entry. So si parent, may financial statement. So may income statement, may balance sheet, cash flows. The same with subsidiary. So complete to rin yung financial statements niya, income statement, balance sheet, and cash flows. However, required ng standard na at the end of each accounting period, the parent should prepare consolidated financial statements. Why? Because although in form, they are separate entities, in substance, they are considered as one. So, substance over form tayo. So, since controlled ni parent si subsidiary, so in the eyes of the standard, so they are considered as one. So that's why si parent dapat mag-prepare siya ng consolidated financial statements showing the operations of the of both companies as one. Right? So, yung goodwill natin, dito na makikita sa consolidated. As well as those fair value of the assets and liabilities, dito na mapipresent sa consolidated. But, consolidated financial statements will be discussed on a separate video. So, actually, the rest of the topics of business combination will be consolidated. So, meaning, we will be tackling all about stock acquisition. Right? So, I hope you are following me throughout my discussion. So, if you have any questions, so don't hesitate to comment it down below. So, let's proceed. Non-controlling interest, as I've said earlier, is the equity in a subsidiary not attributable or directly or indirectly to the parents. So, ang old term niya is minority interest. So, what if there is minority interest? So, at what amount should the parent record it in its consolidated financial statement? So, according to standard IFRS 3, the acquirer measures non-controlling interest either at, so may two options si acquirer, at fair value or proportionate share of the acquiree's identifiable assets. So, fair value method and proportionate method. So, yun yung ginagamit namin dati. Fair value method or proportionate method. In some authors, ang term nila is full goodwill method. Then, sa proportionate share or proportionate method, partial goodwill method. So, in the fair value method, sometimes the fair value of the NCI is given. So, pag given, so yun yung isusulat natin sa ating formula dito. NCI. However, if it is not given, so we will use the assume fair value method. So, ano yung assume fair value method? So, simply, considerations paid excluding control premium divided by controlling interest. So, for example, for 80%, ang binayad mo is 240. So, magkano ang value ng 20%? So, work back mo lang 240 divide by 80% para makuha mo yung 100%, which is 240 divided by 0.80, that is 300. So, ang 20% is 30. So, ito yung assume fair value method. But take note, in computing the assume fair value method, you must exclude control premium. So, ano ba tong control premium, sir? So, this control premiums actually part siya ng considerations paid ni acquirer. So, para lang yung additional payment in order to ensure that control will be obtained. Kaya tinawag siyang control premium. Hence, it will increase the likelihood of a goodwill na result. So, di ba, pag mas malaki yung considerations paid, mas malaki yung chance na goodwill yung result ng combination natin. But yung purpose talaga niya is to ensure that control will be obtained. So, again, yun yung assume fair value method. Pag hindi given, compute mo yung assume fair value. But take note, given man or hindi, the NCI computed using fair value method must not, so take note, must not be less than the amount of NCI computed using the proportionate method. So itong second option ni parent. So ano ba yung proportionate method? So it is very simple. NCI na interest times mo lang sa fair value of the net assets of the acquiree. So kung magkano yung fair value of net assets, meaning asset minus liability at fair value, times mo lang yung NCI percentage. Like for example, 500 yung NCI fair value of net asset natin. So ang NCI natin times 20%, so that would be 100. So ang rule lang dito na dapat tandaan nyo is the fair value, the NCI using fair value method must not be less than the NCI computed using the proportionate method. What if sir less than? So if in case less than yung NCI using fair value method, ang gagamitin na NCI is the NCI using proportionate method. So, para siyang whichever is higher. Right? Okay ba? So, let's have another sample problem in order to understand the concept. Particularly on non-controlling interest. So, assuming these are the financial position or balance sheet of parent and subsidy prior to combination. So the fair value of equipment is 154. So let's change lang natin yung value at fair value. So ang total assets at fair value will be 15 plus 30 plus 154, magiging 199 to. Then less liabilities. So ang fair value of net asset natin will be 184. So fair value of net assets. Okay, do you follow? So we have 4 independent cases here. So case letter A. So assuming si parent acquires 70% of the outstanding common stock of subsidy for 108. So NCI is measured at fair value of 61. So given yung fair value ni NCI, how much is the goodwill or gain on acquisition? So sulat lang natin yung formula. Considerations paid, NCI, fair value of net assets acquired. Okay, so for 70%, ang binayad natin is 108. Then for the NCI na 30%, so alam naman siguro niyo kung paano ginawa yung 30%. So given yung fair value ni NCI 61, but please remember na yung sinabi natin kanina na any fair value should not be less than the NCI computed using proportionate method. So we need to compute first the NCI using the proportionate method. So ano nga yung formula? Simply NCI percentage times fair value of the net asset. So yung NCI rate natin or percentage is 30%. Magkano ba yung fair value of net asset natin? So di ba 184. So 184. So 184 din to. So magkano to? 55.2. Tapos yung given na NCI is 61. So should we use 61 or 55.2? So ang rule lang is dapat hindi siya less than the proportionate method. Since higher siya, so ito yung gagamitin natin, 61. Understood? So again, it must not be lower than the or less than the amount of NCI computed using proportionate method. So ano ba yung result natin? Goodwill or gain? So the resulting amount will be negative 15. So yung result natin is gain on bargain purchase 15,000. Understood? How about our entry? So ano bang entry dito? Simply investment in subsidiary, credit, cash, magkano? 108. So, walang assets, walang gain, walang liabilities na na-recognize sa books ni parent. So, simply record the amount equal to the considerations paid. Understood? So, okay. Letter B. So, assuming instead na 17, naging 80 yung controlling interest. So, ang binayad is 136,800. And NCI is measured at non-controlling interest proportionate share. So, in short, ang gagamitin is NCI using proportionate method. So, same pa rin. Considerations paid for 80%. Plus NCI. So, magkano ang NCI? 20%. Less fair value of the net asset equals goodwill or gain. Magkano ang binayad for 80%? 136,800. Magkano yung fair value of net assets? 184. So, how about our NCI? So, pag NCI using proportionate share method, so no need to compare na. So, simply 20% times 184, that would be 36,800. Right? So, 184 times 20%, 36,800 plus 136.8 minus 184. So, yung resulting amount natin will be negative 10,400. So, meaning, recognized gain on bargain purchase 10,400. So, pag NCI using proportionate method, no need to compare na. Kailangan ka lang mag-compare if ang requirement or ang given is NCI using fair value. We proceed to case letter C. Dito, 90% yung in-acquire ni parent. So, same pa rin. Considerations paid for 90%. Ang binayad natin is 243. So, pag 90%, ang NCI natin will be, of course, 10%. Fair value of net assets, same pa rin, 184,000. So, anong sabi ng problem? NCI is measured at fair value, but no fair value is given. So, anong gagawin natin? We'll use the assume fair value method. So, ano yung assume fair value method? So, work back natin. So, 243 daw is good for 90%. So, meaning, ang 243 is 90% of the 100%. So, yung 10% niya will be 243 divided by 90% times 10%. Magkano yan? 240 divided 0.9 times 10%. That would be 27. So, yun na ba yung gagamitin natin sa NCI? Oops, careful. So, since fair value yan, we need again to compute the amount of NCI using proportionate method. So, 184 times 10%, that is 18.4. So, the fair value is higher. So, okay siya na gamitin. So, 27 yung NCI natin. So, the resulting amount will be 184. That would be a goodwill since positive 86,000. So, madali lang, di ba? So just pause the video if uh, medyo nawala kayo. So ang advantage nito is you can go back to the part where parang nahihirapan kayo. Sige, proceed tayo sa case letter D. So pare-pareho lang sa case C natin, pero ang yung payment natin may kasamang control premium. So magkano daw yung goodwill or gain? So simply, considerations paid for 90%, ang binayad is 243. So again, control premium is part siya ng considerations. Then NCI 10%, fair value of net assets 184. So magkano yung NCI? So wala pa rin given, so assume fair value method tayo. So 243 divide by 10%. But take note, in using the assume fair value method, you must exclude the amount of control premium. So since na-include na yung 18,000 dito sa 243, so less natin yung 18 before natin i-divide by 90%. So 243 minus 18, that would be 225 divided by 0.90%, that would be 250,000 times 10% equals 25. So since fair value pa rin, so yung NCI using proportionate method is 18.4. So yung gagamitin natin na NCI is 25. So 243 plus 25 minus 184, goodwill pa rin amounting to 84,000. Okay? So ang point lang dito sa case D is my control premium. You must exclude it in computing the assumed fair value, but sa considerations paid, included siya. How about our entry? What will be the entry if my control premium? So simply, investment in subsidiary credit cash 243. So no need, walang separate account for control premium. Part pa rin siya ng ating investment account. So, understood? Then, for letter C, same pa rin yung entry. Equivalent lang ng ating considerations, 243. Then, for case B, investment in subsidiary credit cash. Magkano yung binayad? 136,800. Okay? So, again, any goodwill or gain recognized here will not be recorded in the books of the parent. Of course, walang ma-record because if you notice sa ating entry, walang goodwill or gain na nakapresent dyan. Okay, last, before we end this video, so accounting for goodwill or gain on bargain purchase. So as discussed in the first video, goodwill is measured as a difference between the aggregate of the following. So, the considerations paid, the non-controlling interest, and the fair value of the previously held interest. So, ito yung sinulat ko kanina. Considerations paid, NCI, fair value of previously held interest. So, ito yung sa first. And the fair value of net assets acquired. Yan. So, ang difference niyan is goodwill. So, pag positive, that is goodwill. Otherwise, gain. So, anong sabi ng standard? Goodwill should be tested for impairment annually. So, take note, goodwill is not amortized. It must be impaired annually. So, goodwill is considered to be impaired if the carrying amount of the unit's assets, including goodwill, exceeds the recoverable amount of the unit. So, the carrying amount is less than the recoverable amount. Tama ba? Okay. For gain on bargain purchase or gain on acquisition, or sometimes dati tinatawag tong negative goodwill. So, ang sabi ng standard is, before recognizing the gain on bargain purchase in the profits or loss, so di ba, since gain to, so part siya ng income statement natin, the acquirer should reassess. So, kailangang reassess or i-review or i-check whether it has correctly identified all the assets acquired and all the liabilities assumed and whether it has been properly valued. So, bakit kailangan i-reassess? Because normally, the result of business combination is goodwill. So, seldom lang mangyayari na gain yung result ng business combination. Kaya, pag sa initial computations ni acquirer, pag gain yung result, hindi dapat niya agad i-recognize sa profit or loss. Ang dapat is i-reassess niya baka may nakaligtaan siyang asset or liability or kulang yung valuation niya. So, if na-reassess na kung wala talagang mali, so doon na natin i-recognize ang gain on bargain purchase to profit or loss or income statement. Right? So, I think that's it for this video. So, again, if you have any questions, so kindly comment it down below. So, yun lang po. Thank you.